Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning. I have a lot to cover in today's video. We're going to take a look at the four major U.S. indexes. We're also going to jump in and take a look at the emerging markets. We're going to take a look at breadth readings as well as the dumb money, smart money confidence spread. I want to take a look at the major U.S. index, the S&P 500, on a shorter time frame here and kind of zoom in on some key levels. For the first time since early December, we have closed below that white moving average. It's the 10-day moving average. So really going all the way back until October, we had a total of like 2 days where we closed underneath the 10-day moving average. We have pretty much been in a very consistent straight uptrend line ever since we broke out over that 30-50 zone. We've just continued higher. And we've talked a lot lately about how the move up, probably the angle of attack wasn't necessarily sustainable. There was a lot of breadth readings and sentiment readings that were of a little bit of concern. And this week we got hit with the news of the coronavirus out of Asia, potentially slowing down global trade as they look to contain that, and that is what has caused the sell-off so far this week. Now, from the high of last week to the low of this week, it's only a 3% move, but it did it pretty sharply, did it pretty violently, and we had a nice bounce after that initial thrust lower earlier this week, and it came up and it failed right at that 10-day moving average. And in fact, this morning we're set to open down about another 0.75% down back near that 32.50 zone. So about right here is where we're set to open. When I zoom in and look at this on an hourly chart, the levels posts that I put out every day really discuss this, but I want to zoom in here and talk about it on the video. The really important levels are going to be that 3,300 level, and that next major big round number, of course, is at 3,200 level, and that actually is about 3,205 to about 3,215 is really where that major zone of support is. That's really the area that on the short term you want to pay very close attention to. Again, this morning we're going to open somewhere about right around here. So wouldn't take much more selling to ultimately come down to test that zone. And that would, how we react there would be very, very important. But again, we pull back, we take a look at this. First time we've really traded underneath that 10-day moving average for a little while. Another down day, and that 10-day moving average will actually start pointing down. Then we'll have the 50, the 200, and the 20 pointed up and the 10 pointed down. That, of course, we no longer have all of the moving averages aligned properly. That's when things get a little bit dicey, and you can kind of look at previous points in time on this chart where those moving averages start to make those changes. We get some kind of messy trading happening in that zone. So again, this is not to say that this, the bull market's over or anything like that. I just want to make that very clear. It's just short term. We're due for some sort of pullback just from everything that we've been talking about in the videos as of late. And of course, we have a news event that subsequently is allowing that to happen. This right here, it would be the next major level on a daily chart, would be that 3150, and then below that, we're really looking back towards that breakout zone being the key important area. When we look at RSI, this uptrend line that we've had in place since the breakout subsequently broke this week. We look at the MACD. The MACD subsequently is crossed over, and the histogram is expanding to the downside. So we could be in for some more selling here. And again, we're just going to pay attention to these next major levels. And this is, of course, the market just doesn't go straight up forever, right? There's going to be corrections along the way. This is perfectly normal. This price action. But if we start breaking some of these other key levels, that would be a real concern. Really, the biggest one, the most important one, if you're a mid to long-term investor, is going to be that major breakout that we had last year. We look at this on a weekly chart. Right, this zone, this breakout right here is a very, very key important level. And if we break below that, that's when I would start getting really concerned from the mid and the long-term investment standpoint. We're not there yet, and you can see even on the weekly, we're still not below the 10-week moving average. So that is something we have not fallen under since that breakout at all, the 10-week moving average. So continue to pay attention to these zones, and we'll keep you apprised in these videos. Now, you're looking on the Nasdaq, same. It got back up over that 10-day moving average, so that didn't act as a ceiling the same way it did on the S&P 500, but also set to open lower here today. Not by the same amount, more around 0.5%. The Nasdaq's been a little bit more resilient here. We take a look at the Dow Jones. weaker, right? Didn't even get back up to the 10-day moving average. Failed at the 20. That of course is a bit of concern here. Same comments apply as the S&P. We're really watching the important levels on this, and that's going to be that round 28,100 number and 27,200 number would be really those keys there on the Dow. And of course, when we take a look at the Russell, right, we haven't changed any of the drawings on here. This line I've had up for a very long time is an area of resistance. We tagged it basically perfectly. Subsequently, have come back down. It's under the 10. It's under the 20. It is actually going to open under the 50 today. Weakest of the index has been now for 2 years essentially. Back underneath that 1620 zone is a major problem. That would be a false breakout. So that would mean we broke out, we ran up into the next resistance, and then we broke back underneath this level. 1620 is a very, very key level. That is where I would pay a lot of attention moving forward. Now, the emerging markets, right? We'll leave all the drawings that we've had up on the past here as well. We talked about this very, very important level at 11,000. We broke above it. We continued to push up. We subsequently have come back. We're basically right in there testing that zone. All right. Really, any more weakness there out of the emerging markets, we would have a major failed breakout if it would hold underneath this level for more than a couple of days. And really, if we look at that next really important level, and you can see the action back in July, you can see the action in November, right? That 10,065 zone underneath of that would be a real problem. That would be very concerning from the emerging markets. And it makes sense that if we're seeing a worry of global trade shutting down to a virus, that the emerging markets would subsequently get hit on that news as well. So we're going to pay very close attention to what goes on over here. Now, when we look at our breadth readings, which we discussed in these videos as well, last time we really talked about needing to hold over that 500 level. A break underneath 500, the next zone we'd be watching from a breadth reading perspective is at 300, where we had that nice base from November and December before we ultimately broke out and headed higher. We've had really ugly breadth readings since the market started selling off here. It's kind of accelerated here to the downside. This is the zone we're going to be watching moving into next week to see if it kind of stops, bases, turns back up, or if it continues to fall. If it continues to fall, really the bottom end of that zone is 200 underneath of there. There really isn't anything until we fall back into the negatives. So I think it's very, very important what happens here breadth-wise, right? Again, everything's kind of been hit here over the last week on that news, and subsequently it shows up here in our breadth readings charts. Last week when we discussed that dumb money, smart money, we showed basically this line as that mouth, right? It really expanded, got really, really stretched, and I told you at some point those we're going to head back together, and at some point they ultimately will cross. That is, inevitable eventually. But this reading subsequently, a lot has come off the table, so it's still very stretched on this side. It's not as stretched so much on this side. Smart money confidence was down in the low 20s, right? It's headed back up. It's almost back towards the midpoint. The dumb money, retail money, essentially confidence level is still pretty high, right? If we go back and we look at this chart, really it's still above in that high reading area here in that above 70 zone. So there, of course, still is room for this to continue to fall. We're going to watch this. Usually, not always, usually they ultimately end up crossing at some point here. And that, to me, would be a very good signal in the short term that we're due for a bounce if we continue to sell off. So we're going to continue to watch the sentiment readings again, historically stretched out of control here recently, and you can see kind of the last time we had an over 70 rating and we had an under 20, under 20 rating. Look what happened. I mean, that's a big crossover that essentially happens over the course of a number of months. All right, so we'll continue to watch this. I personally think sentiment readings are very important, get an understanding of where kind of everybody is positioned, and it's something we like to continue to pay attention to. So, as always, guys, thank you so much for taking the time to watch the video. If you have any questions, comments, concerns, you want to reach out to me, feel free to. You can reach me directly at 814-580-9881, or you can shoot me an email to mtedeschi@perspectivewealthplanning.com. I hope you guys have yourselves a fantastic week. As always, I'll see you guys next week. Take care.